Hi, this is Brian Shepard from the floor of the CME Group. Happy Friday, and what a day it is in the markets as well. You know, all week the breadth has been stronger in the equities. So today was quite a surprise, to be honest, but it shouldn't come to, as a great surprise. I think the market, obviously has been oversold, and I think that's what we saw during this, this past week of asset allocation. Obviously the bonds have taken a hit, and the S&Ps have taken out numerous stops on the upside. Again, with these economic numbers that have come out recently, we've beaten some, we've been mixed on some, we've missed on some. So, we look forward to next week and the following couple of weeks to really see where the trend will be. At this point, it does look like most people are thinking that the risk on is back on the table. And fund managers will have to catch up to for earnings. We had the window dressing for the end of the quarter that helped us. Historically, this is a strong month, strong period going into the 4th of July weekend. But it's followed by Traders Almanac calling for the worst performing months ahead of us starting in July. The ISM number is, I'm sure it's all over the tape. That breeds new hope for higher levels, and that might have something to do, some positive effects on the future earnings situation. As we know, the earnings will start coming out in about a week to 10 days, and we'll have to wait for that, for further glimpse of what's coming. We do have next Friday the unemployment for those that missed it today. And on this move, I mean, the NASDAQ's up, 150 handles or so. The S&Ps are up about 70 handles from the recent lows. It's very difficult to say this thing's going to go straight up. So, use your stops wisely. We did make something a little bit, I don't want to say famous, but we pointed out as a joke that 666 low times 2, 1333. We're back into that range right now. And that's held, for whatever reasons, it's held at 31, 33 areas. So we look for that to be another upside target near term. On the downside, it doesn't. There's no reason to see why the S&Ps aren't going to hold on to most of the rally today. On the downside, would look for 1317 to 19. Yesterday's low in that mid-afternoon sideways trades 1312.5. Today's low 12.5 in the overnight session for Globex, and the day's trade was 1313. So no reason to think that we're going to go back through those mid-13s. Have a great 4th of July weekend, and we'll see you next week.